Let's get you that markets update now. And local markets will be hoping for boosted trade at the start of a short week. The local bourse was down 1.41% for the week, pulled lower by losses in industrial metals, food producers, resources, industrials, including precious metals. Equity analyst at Sentio Capital is Andile Buthelezi, who joins us now for a quick analysis of how the markets are shaping up. Shange, good morning to you, and thank you for your time. Let's quickly start with your overview of how local trade is faring so far.
Good morning to you, Crowley. Look, unfortunately, that weakness has carried on into this week's trade. The market did start on the back foot, and that's definitely picking up from the weakness that we saw coming out of Asia earlier this morning. So Asian markets are down. And I do think a large part of it does still have to do with, number one, what the Fed was commenting on last week, suggesting that, look, we are potentially going to see at least one more rate hike before the end of this year. But more importantly, rates are probably going to stay at elevated levels for a lot longer than what the market had initially thought. So a large part of the commentary that came out of last week has fed into some of the equity weakness in the markets across the world that we've seen, including our own, of course. But also in China, there was a new story coming out of China like yesterday, where one of their larger property developers, Evergrande, actually missed out on a coupon payment. So first of all, they didn't have a creditors meeting that they were supposed to have, and secondly, they missed out on a coupon payment, which suggests that the company could be in a little bit more trouble than what everyone is currently thinking they're in right now. So share price reacted negatively, of course, and that fed into the broader property sector in China, and that weakness has definitely carried on into our markets this morning.
Let's talk commodities. Oil prices are down amid concerns that fuel demand will suffer at the hands of the central bank, who are holding interest rates higher for longer periods, even though the supply is expected to be tight. Help us make sense of those market moves.
Yeah, if I look at what the Brent crude oil price is trading at this morning, we're at around $92 per barrel, give or take. And that's off slightly from the 95s that we saw last week. So they're not off too crazily, those oil prices. And I can understand the argument suggesting that higher interest rates, higher for longer interest rates, could then start to dent on economic activity. And a slowdown in economic activity will probably then also lead to a reduced oil demand, which then has the downward pressure on prices. I think the bigger thing to look at with oil is actually what's going on with supply, because I mean, we did hear from Saudi Arabia and Russia that they've decided to extend those production cuts that they have in place right through to the end of the year. And I think a large part of what we're going to see with the oil price is going to have to do with what we're seeing on the supply side of things. We've seen estimates suggesting that we could, in the short term, exceed prices in excess of $100 a barrel, which, of course, depending on who you are. If you're an oil producer and you make money from high oil price, you'd be okay with that. But if you're a consumer and it feeds into everything else that you do, it's not great news. So I guess the news story that we're seeing this morning suggesting that oil prices have come under a little bit of pressure from a consumer perspective is welcomed. But I don't think that move is a big move. The move from 95 to 92, I don't think is too significant.
Yeah, nonetheless, it is still too painful at the pumps. Let's talk the Reserve Bank publishing South Africa's leading business cycle indicator. Help us make sense of that data and what it tells us about our economic growth trajectory.
So I think that data just literally dropped not too long ago, so I haven't had too much time to go into the detail of it all. But I think headline is that it is a marginal positive number. And this is now 2 consecutive months we've seen a marginal positive number, which is a welcome relief because year to date so far, outside of the 2 positive months that we've seen, have all been negative. And if I look at some of the underlying data, it suggests that 6 of the 10 line items that they look at did come in positive territory. Things such as job advertisements, volume of orders in manufacturing, things of that nature have come in positive territory. But then also equally on the negative side of things, just has been from an export perspective, those commodity prices. Obviously, South Africa being a large commodity producer and exporter, we've seen what commodity prices have done this year. on the back of a slower than what we thought China growth. So the softer commodity prices have definitely fed into some of the weakness that we've seen in SA. But I guess, look, on the positive side of things, like I said, it is a marginal positive, this particular data point. So we'll take that. We'll take what we can get right now.
Let's conclude with Discovery Health suffering a setback in the legal fight with the Road Accident Fund. And this is over medical schemes' right to claim reimbursements for past medical expenses from the fund. What's going on here?
Yeah, interesting one. So look, from my understanding, Roads Accident Fund issued a directive suggesting that they would no longer pay medical aid schemes' claims for past incidents that happened on the road. Obviously, Discovery didn't like it, so they took them to court. Court interdicted RAF's directive, suggesting that RAF should continue to pay. RAF took that decision to court, lost that particular judgment, and now they've taken the decision to the Constitutional Court. So we don't have an outcome on that yet. So we are waiting ruling on the Constitutional Court matter. In the meantime, RAF has of course stopped paying, has stopped making those payments. And what Discovery had suggested and what they took them to court for in this particular instance is they were saying that in the interim, while we wait for the outcome of the Constitutional Court ruling, you have to continue making these payments because by their calculations, Discovery's that is, the industry in general is losing 2 million rand a day because of the fact that RAF is not making these payments. So Discovery was hoping that the court would rule in their favor. Court didn't rule in their favor. They took that particular matter under appeal, and they've now since lost the appeal. So I guess that's what the news story that was out this morning is suggesting. But I think the more NB point to note is that this particular ruling, the setback that Discovery has whatever has happened to Discovery now is not about the merit of the case in itself. So the merit of the case in itself will definitely still need to be heard by the Constitutional Court matter. And whether or not they are successful, I think you are probably better placed asking a legal mind on how successful it will probably be. But yeah, look, that's what has transpired this morning.
Yeah, we're going to have to see how this particular case pans out. For the time being, let me thank you very much for your time. Andile Buthelezi, an equity analyst at Sentio Capital.